Good afternoon, it's Adil Fazal here, market analyst at CFDs.com, bringing you a review of the FTSE 100 end of day market analysis. And be sure to visit CFDs.com for your trading needs. Alternatively, you can obviously apply for the 25% cash bonus offer as well. Be sure to visit cfds.education to certainly learn more with regards to my analysis and charts as well. Okay, now this is a review of the FTSE itself. Let's start with the fundamentals first and foremost. We had the Asian market certainly negative overnight. We had the Shanghai negative. We had the Nikkei negative too. The Nikkei was down almost 1.7%. The Hang Seng and the Shanghai. So certainly a risk-off scenario there. A failure to follow through on the US strength. The night before we had quite a stellar rally in the US markets and a failure to follow through on there. And that created a risk-off tone in the morning. Now, obviously the markets totally ignore that, and as we can see, we certainly gapped higher and off we went to the races. In terms of economic data this morning, we'll certainly dwell upon that as well. The actual inflation data out of the UK slightly, retail RPI slightly higher than expected from a year-on-year and a month-on-month basis. Producer price PPI certainly came out. The core certainly came out worse than expected, so minus 0.2%. Now the core itself certainly weaker, although we did have Miss Shafiq the day before sounding hawkish, and today there was further comments, but the CPI certainly came out in line. We had the German ZEW's data actually coming out better than expected, and that certainly explains the reason why we had this stellar rally in the German DAX today. Rallying almost in excess of 300 points. Eurozone ZEW as well came out slightly better than expected, and the employment part of the equation certainly came out in line. Now we've had US data as well. The consumer price index, which is a core, came out slightly better than expected. New York State Empire data certainly better than expected as well. Now we've had the month-on-month flat in terms of CPI inflation, and the excluding food and energy, etc., all came out more or less in line. We've had the Red Book sales certainly come out worse than expected, so slightly lower, and the CBI leading economic index slightly better, and the housing data slightly worse. So a mixed set of results there. Net, the inflation data more or less is flat, but the dollar certainly is rallying regardless. Now if I bring up the chart of the US dollar and show you the reaction today, given the economic data out of the US, although we do have concerns, or we have terrorism concerns right now with this situation in California unfolding, potential school threat in terms of the terrorism level being alerted, or LA schools closed after credible terror threats. So certainly a risk-off scenario. That's one of the probably reasons why we're getting a dollar rally, even though inflation more or less came out in line and potentially flat as well. Now we have this pattern on the dollar itself. You do have this bear flag formation, or we had this bear flag formation, but we are seeing strength thus far, given the fact that Miss Yellen obviously at 7 p.m. today we have the decision with regards to a hike or not. So again, that's going to be interesting to observe and watch. Okay. Now in terms of the actual market itself, or the dollar itself, again, be sure to watch out with regards to moves there. Now the Euro USD certainly is moving lower, and that certainly has helped European equities this morning, even though the economic data out of the Eurozone certainly has been better than expected in terms of ZEW. But yet the market has found a risk-on tone, because the euro obviously moves lower, and the actual in the European indices move higher. Now the Aussie itself has been flush post the dovish commentary with regards to a potential rate cut, and the Kiwi certainly has been hit hard as well, given the fact that commodities are now potentially into resistance, and as we've seen, we certainly have dollar strength post the concerns of terrorism. Now the FTSE 100, let's just bring up the actual index itself, and let's see exactly how this has fared today. Now the daily chart certainly has bounced off the 5870 level. Now we bounced almost 150 odd points, so very impressive bounce thus far. Now we do have this diagonal trend line resistance. We did have trend resistance around the 6013 level, but we certainly seem to have smashed through there up to the 6035 level. So if we do continue, then the 6075 level will be the next resistance zone. The 10-minute chart, we had the multiple horizontal resistance here. We had the 200 MA resistance as well. But the market certainly have obviously got moved higher and actually attempted to make a new high at the 6036 level, even with the terrorism concerns. So again, that's something certainly take into account. Bear in mind we do have this unfilled gap at 6095, so any real target the market will certainly look towards that. Now we do have this potential inverted head and shoulders, although it's weak on the right shoulder. Again, this is going to be observed and watched. Any test of that 5985, 5980 level, that will certainly be a buying opportunity for me. I'm currently short, so it'll certainly be certainly an opportune time to switch my bias from short to long, and obviously look for a move on the upside. Okay, so certainly this pivot low here was quite powerful. We had a retracement at this resistance level at 5980. Any retracement was certainly bought, and the market certainly pushed higher quite substantially. So the move has been very, very stellar thus far on the actual FTSE itself. Now the volatility index is now coming into potential support and looking to potentially reverse and create a risk-off scenario for the FTSE. The FTSE All Share, you can see certainly an impressive and a very stellar rally as such. Now we do have previous hot support equals resistance, so we're not too far off in terms of a potential resistance zone on the FTSE 100 itself. We had this downward sloping diagonal trend line. Obviously the market certainly has negated that as well, so again this is going to be observed carefully in terms of the next move. Now the Euro Top 100, yes, we've thrusted higher back into previous support equals resistance. European daily as well, previous support equals resistance, so again this certainly needs to be observed. The FTSE 250 now has bounced off that horizontal support zone and looking at potential support equals resistance in terms of the FTSE itself. Oil has another day in the green, certainly impressive, although we have put in a potential double top and a topping tail, and we are moving lower at present. So therefore that will certainly exert pressure on the actual FTSE 100 itself. So when oil double tops intraday, then that generally is considered to be bearish for oil and bearish for the FTSE as well. Copper, again, copper has been weak all day. As you can see here on the 60-minute chart, we continue to make new lows, so this is not good intraday. It's certainly a very bearish price action. That doesn't bode well for the FTSE 100 itself, especially given the fact that obviously dollar itself is actually rising. Now looking at the 10-minute chart of gold, again, gold certainly seems to be moving lower. Again, it's a risk-off scenario, and the bias certainly remains bearish. Now the mining sector, again, even though we've had this stellar rally today, the mining sector certainly has not joined in, and that's a warning sign. Okay, that's not a very good sign, not a healthy sign for the FTSE. The FTSE 100, we seem to be regaining or attempting to regain that lost ground in terms of that support, but in theory its previous support equals resistance, and therefore you are looking at potential new lows. Same concept with regards to retail as well, previous support equals resistance, so certainly be aware of that. Any type of rally will certainly be facing some resistance in terms of the actual move higher. The banking sector, same concept, previous support equals resistance after we've broken out that trend down, and therefore you are looking for further moves lower. So again, a risk-off scenario. Pharmaceuticals, yes, you are holding support, so certainly a strong argument for the pharmaceuticals holding, so again, keep an eye on there. Telecoms, yes, we've had this dead cat bounce. Whether or not it's a sustained move is a different question. Looking at the beverages as well, looking at a daily chart, yes, we've had that bounce of previous resort, resistance equals support. The insurance sector, again, yes, we've had the bounce, and therefore we've seen this move higher on the FTSE itself. The Shanghai index still remains weak. You have an unfilled gap below, but this diagonal trend line certainly is looking to potentially hold. The Nikkei seems to have closed a gap, or multiple gaps. You do have this final gap here at the 18430 level, and then you are looking for a potential thruster and move higher in terms of the actual Nikkei as well. So certainly something to bear in mind in terms of the actual gap. So again, gap fill support is coming on the Nikkei itself for a potential move or a thrust higher. Okay, so I think that's a wrap up in terms of the FTSE itself. Bear in mind that you do have a support zone is seen at 5985, 5980. At present, the terrorism concerns certainly seem to be gripping the actual US markets at present, and it will be very interesting to see exactly how they trade. We did have this diagonal trend line. We certainly seem to have broken out. We had this horizontal resistance. We certainly seem to have broken out of that as well, and it will be very interesting to see how this market trades. Again, I do expect, given the dollar strength, etc., and obviously hurting commodities, you are looking at a potential retest of this 5985, potential 6000 level going forward. So again, it should be very interesting to see how the markets trade around that. Okay, I think that's a market wrap up with regards to The FTSE, again, bear in mind the unfilled gap at 6095 post-Fed, that is a real possibility or a potential possibility. But given the fact that we are going to be raising rates, etc., then that should certainly exert more pressure on the commodities sector, unless Miss Yellen sounds more hawkish than everybody expect, or more dovish than everybody expected, and that will be a totally different story. Given the fact that we've already rallied quite substantially in European indices, it's very hard to see any real sustained move on the FTSE when the mining sector and the oil and gas sector are failing to participate. Okay, I think that's a market wrap. Be sure to visit cfds.com for your trading needs, and the market currently is into multiple resistance zones. Goodbye.